Hey, what's up guys? Thanks for tuning in. Today's video is all about pre-approvals, what they really mean. Stick around, we'll talk about it. Okay, pre-approvals. That is a scary, scary word to me, and this is why. When a client comes in and tells me they have been pre-approved at a bank, in their mind, it means they are good to go and they can buy a property, maybe with no conditions, and this is not the case. The word pre-approval should never be used. The word pre-qualification should be used because you have been qualified to purchase a home up to X. So if the bank told you that you can be pre-approved for a home up to $500,000, it means your application will warrant that value because your debt service ratios allow you to go that high. Here's what they don't tell you. Especially if you did a get approved in 60 seconds app, it is impossible for you to be approved. They take your credit score, your down payment, and your income, and poof, they give you an approval, but they don't realize that it's more important than that. Imagine you looked at a bunch of homes because you were pre-approved in 60 seconds, only to find out when you purchased that home with no financing conditions that you cannot be approved. And now you're gonna be sued, and now you're in a whole world of hurt. You have to do more research than 60 seconds on an app to tell you that you're pre-approved. If your credit is 700, your beacon score is 700, then your credit is excellent, or is it? Was your beacon score, your credit score, your FICO score, was it 775 3 months ago? Do you have 2 new collections on your bureau and have you missed a few payments especially during COVID? If you have, it means that that score is irrelevant. It means that your credit is coming down, and the default insurers, in Canada, you require default insurance on all purchases with 5, 10, or 15% down. In the States, it's Fannie Mae, Freddie Mac. But you require their insurance. And in Canada, those insurers will look at your credit and say, no, thank you. We don't care what your score is. Now you're in trouble. If you said you had made $100,000 income, but it's commission-based and you've only been there for 9 months, you can't use your income. That computer cannot tell you those things. The person at the branch who sits down with you, who hasn't asked those questions, is now setting you up to fail because you have not been pre-approved. In fact, CMHC, CG, and Genworth do not issue pre-approvals. You are only half of the equation. Your application is only half of the equation. The real estate, the purchase you're making is the other half. They have to approve the other half. And if you haven't purchased it yet, how can they approve it? For example, you buy a home that's zoned agricultural/residential. You're in trouble. Residential, commercial, no good. But you didn't know that because you were pre-approved and thought that meant you now have an approval. The answer is you don't. You have been qualified to purchase up to, and that's only half of the equation. That's what scares me the most when someone says they've been pre-approved, because it's not worth the paper it's written on. Unless you're sitting down with somebody, going over your credit, going over your income, reviewing your income and saying, listen, when you buy a property, you have a fantastic chance of being approved because the covenant is perfect. You're great. Having said that, I can't give you a 100% guarantee because we don't know what property you're buying. What if that property you're buying is in the middle of the city and it's perfect, but it used to be a grow operation and they don't want to touch it because CMHC has seen it before and they've already declined it? Now what? What if it's got knob and tube? What if it's got, I don't know, old stone foundation that the lenders don't want to deal with? We don't know these things and we don't know the property. So be very, very careful when you go in and ask, can I go with no conditions? Unless you have 20% down, do not have to deal with the CMHC, CG, or Genworth insurers, and you are okay with, on a worst case scenario, in case there's something wrong, paying a higher interest rate for a year or so because you couldn't be qualified the way you wanted to. If you're okay with that, then you can go with no conditions, sure. But if you are a rate shopper and you need what your neighbor got, you need that 1.8% rate that your neighbor got, then I would not go in with no conditions for any reason. It's just a disaster waiting to happen. So guys, today's rant is just about pre-approvals and the differences between them and the pre-qualification. In fact, there is no difference because there should be no such thing as a pre-approval. In my opinion, if you walk into a branch and they do the homework, do you think they're gonna tell you when your credit's good and your income is good and you've got a down payment of 15% on your own, they're gonna say, no, you don't qualify. They're gonna say, yeah, here's a piece of paper. And they're hoping by the time you buy a property, it's all gonna work out. That is playing with fire. That's wasting your time, right? So you have to be certain that what they're trying to do, that they've reviewed your T4s, they've reviewed your NOAs, they've reviewed, your job letter, your pay stub, how long you've been there, and if your previous employment, all of these things come into consideration. So it's impossible to get a pre-approval or to be approved in 60 seconds. It's just impossible. It's another advertising thing that you've been suckered into, clickbait, and it works. I ain't even mad at them. That works. They get business that way. But the truth is, they don't mean anything. So I'm hoping that this helped you understand what a pre-approval actually is, and that it's really just a pre-qualification of the amount of home you can buy or even a rate hold at this point. You always want to double check with somebody, especially a mortgage broker, if you can be approved, and if so, what kind of properties can you buy? Where can you buy? Because some places they don't want to insure either. Okay, what happens if you go in at $30,000, $40,000 above list price? And they deem that there's no comparables in the area, so you actually have to come up with that money on your own, that extra. They're not going to service the $430 you paid. It's only worth $400. Yes, there was 15 offers, but that's not their problem. There's nothing in the area to suggest it's worth $430. So now you have to come up with the extra, and you can't. Now what? So we always have to be aware. You always have to speak to somebody in regards to what can I afford, and then put in a financing clause to make sure that you can get that property. Okay, I hope that helped. I hope that educated you guys out there a little bit about pre-approvals and what they really mean. If you guys want, go to www.westpauls.com, schedule book a call with me. I'd be happy to go over your situation with you. You can hit me up on Instagram, on our Facebook page. We look forward to hearing from you guys. And like I say, always do your research, consult a mortgage broker, perhaps this guy, mortgage teacher, and we look forward to talking to you real soon. Cheers.